Good morning students, I welcome you all for the online class of business studies. Today we will be going to continue our topic, that is the features, characteristics of debentures. As I already introduced to you, once again I want to recall the debentures. First of all, what do you mean by debentures? Debentures are the long-term borrowed fund for the companies. Those persons who are issuing purchasing the debentures of the company, they are known as a debenture holder. They are treated as the creditors of the company. As creditors, they are not considered as owners of the company. They are just give the money for the company for a specific period of time, and they will get in return a fixed rate of interest which is compulsion for the company to give to them. That is known as the debenture, what we learned. Once again we will record after the meaning the features of debentures. Let us have the features of debentures. Features, characteristics of debentures. When we see student, it is a type of borrowed fund. Debentures are part of borrowed fund capital, as debenture holders are considered as the creditors of the company. Fixed rate of interest. The interest on debenture is paid at a fixed rate. The rate of interest is decided in the annual general meeting of the company. Compulsory payment of interest. Payment of regular and fixed rate of interest is a legal obligation of the company. Company has to pay interest to its debenture holders irrespective of its profit earning capacity. As I already introduced to you people, it is compulsory, a fixed rate of interest, it is a borrowed fund, all the points is given the same. Security feature, yes, company mortgage the asset for getting the debentures to be issued. Most of the time debentures are issued against the charge of some fixed assets of the company. It means if the company is not able to pay the debenture holders a fixed rate of interest as well as the principal amount, then debenture holders can claim over the personal property of the company. Redeemable, paid back. Redeemable means paid back. Debentures are always redeemed or paid back on expiry of a fixed period of time. No voting rights. Debenture holders have no say in the management, as they are never granted voting rights in the company. Appointment of trustee. Yes, definitely student, appointment of trustee must be there. When a large number of debentures are sold to the general public, then usually a trustee is appointed. Generally there are the banks. Trustee can be a bank or a financial institution, because more good we cannot get than that. Trustee is a person who will be appointed to ensure that the borrowing firms fulfill its contractual obligation in the time. There will not be any type of fraud in practices between the company and the debenture holders. For that, trustee are appointed. So these were the features of debentures. I hope you have understood the features, and from features meaning is more clear. Types of debentures, student, when we learn what are the types of debentures, the very first type of debenture is, depending upon the terms and conditions, there are the following types of debentures. Very first, secured debentures. What do you mean by secured debentures? The debenture holders who are having a security, please, if you are in this, if it is not given in your book, make a screenshot so that you will be understanding this part very easily. Secured debentures, student, debentures are which are secured by a charge on the immovable property of the company are known as secured debentures. Is it? The debenture which are secured by a charge on immovable property of the company are known as secured debenture. In case of default, if company default means company is not able to pay the amount by the company, the debenture holders can recover money from the mortgage property by selling it off. Unsecured debentures, student, what do you mean by unsecured debentures? Means those type of debenture holders which are not having any security from the company. If the company not pay to them, they cannot claim over the personal property of the company. So such debentures are unsecured, do not carry a charge on the fixed assets of the company. No property is mortgaged with the debenture holder. In case of default, they can file a case in the court but cannot recover money by selling an assets of the company. Now the third variety of debentures are convertible debenture holders, student. What do you mean by convertible debentures? These are those debentures which get converted into equity shares on expiry of a fixed period of time, are known as convertible debentures. The ratio of conversion and the period of conversion is specified at the time of issue of debentures. That is known as convertible debentures, student. Non-convertible debentures are those which cannot be converted in the long life of the business into any equity share. It is known as non-convertible. It means they will not, after the expiry period of the debentures, they will be just left from the company. They always remain the creditors of the company only. Now we will go to the merits, advantages of debentures. When we will see the merits and advantages of debenture, student, there are the following merits of the advantages of debentures. Debentures are very common and popular securities of the issued by the company due to the following reasons. Very first, low cost. The cost of raising debenture is less than the cost of raising preference shares or equity share. It is a cheaper source of finance. No dilution of control, student. After admitting the debenture holders, there are just the creditors of the company. They will not having any ownership rights. They will not be participating in the management activity of the business. That shows there is no dilution of control. Means sharing of control will not be there with the debenture holder. Debenture holder do not get any voting right. They are not allowed to participate in decision making. So debenture financing does not result in dilution of control of equity shareholders. Attract large number of investors. The company offer a fixed rate of interest on debentures. The fixed return appeals and attracts many investors to invest in debentures. Hence, the company can collect a large amount of funds by issue of debentures. Interest is treated as an expense, student. The interest paid to debenture holder is considered as expense of the company. Interest is deducted from the total income of the company before calculating income tax. So, the liability of tax reduces. Low rate of interest. The earning rate of the company by utilizing debenture fund is much higher than the rate of interest offered to debenture holders. As a result, equity shareholder earn more part of the dividend if more surplus profit is earned, because the rate of interest which they have to give to the debenture holders after earning surplus profit is also fixed. It will not increase as per the income of the company. So that is a good advantage. The rate of interest is low. Flexibility. A company can repay the funds raised through debentures when it does not require it anymore. It means they can return back the money of the debenture holders and they can get rid from the debenture holders. The danger of overcapitalization get minimized because debentures can be redeemed out of the profit. Demerit, disadvantages of debentures. When we see the following are the demerits. First of all, recall once again the advantages of debentures. Very first, it is low cost. Second, no dilution of control. Attract large number of investors. Interest is treated as an expense, so it is deducted from our income and we will get rid from the tax. Some of the term we will be relaxed from the tax to some extent. Okay. And low rate of interest is there. In the surplus profit case also, we enjoy the surplus profit as we have to pay a very fixed rate of debentures. In that case also, flexibility is there. If the company don't want to keep the money of the debenture holder, there is no requirement. They don't want to enjoy the overcapitalization of the capital. They can remove them by paying them the money back. So that is a flexibility. Demerits, disadvantages of debentures. When we see what are the demerits, students, disadvantages. The following are the disadvantages or demerits of the debentures. Very first, they can claim over the fixed obligation is there. That is, payment of interest is a fixed obligation. Whether the company is suffering from loss, then also they have to pay the rate of interest to the debenture holders. Payment of interest is a fixed commitment of the organization. Whether it is earning profit or not, it is not the rule. Sometimes company have to borrow fund for paying back to the debenture holders. So that is a big problem for companies some of the time when they are suffering from loss situation. Reduction in credibility. Yes, more the number of debenture holders will be there, the creditworthiness of the company will be reduced. Financial institutions and lenders hesitate to lend funds in the companies having more of debentures, because already the company have taken so much debenture. Who will be involved to have the partnership with that company? The creditworthiness of a company which has issued a large number of debenture is low. Charge on assets. Usually debentures are issued against the securities of fixed asset. During the time of depression, if a company is unable to pay the regular amount of interest and find it difficult to repay the amount, in this situation the debenture holders can have claim over the assets of the company. No voting rights. The debenture holders are not allowed to vote in the management of the company. All the decisions regarding interest rate for debentures are taken by the equity shareholders only. Therefore, they remain at the mercy of equity shareholders. So, there is no voting rights, students. Next comes difference between shares and debentures. Number of points of difference: shares and debentures. Nature known as status, voting rights, control, right to return, everything. Shares and debentures. Nature: shares are considered as part of owner's fund, whereas debentures are part of borrower fund. Shareholders are known as persons who purchase the shares of the company are known as the shareholders, whereas the person who purchase the debentures of the company are known as debenture holders. They are also known as the creditors of the company, whereas shareholders are considered as owners of the company. Voting rights, when we see shareholders get voting right but debenture holder not. The control of the company lies in the hands of the shareholder, not in the hands of the debenture holder. They are not having any participation in the or voting rights in the matters of the company. Right to return. Equity shareholders have no right to get regular return in case of loss, whereas debenture holders have legal right to get regular amount of interest even when company is not earning profit. Security point, when we see no assets of the company are mortgaged as security against the issue of shares, whereas company has to mortgage some of its assets as a security against the debentures. Redemption point of view, when we see except redeemable preference shares, no other shares are redeemable. They are paid back at the time of winding up of the company and after settling the claim of all the claimants. Debentures are generally redeemed on expiry of a fixed period of time. Risk point of view, when we see shareholders are the primary risk bearers of the company, whereas minimum risk is case of debentures. Commercial banks, borrowed funds, short-term and medium-term finance. Let us see. Commercial banks occupy a very important position as they provide funds to different purposes and different periods. Firms of all the sizes can approach commercial banks. Generally, commercial banks provide short-term and medium-term loans. But nowadays, they have started giving long-term loans against security. Definitely, they also started doing the business like various commercial banks are there, HDFC, Axis, and many commercial banks are there. We started offering loans for the business purpose. Merits of commercial banks are there. Banks provide funds to firms as and when required. The banks keep the information of borrower confidential and business can maintain its secrecy. No formalities of issue of prospectus etc. are required, so it is very easy and economical source of funds. It is very flexible source of loan amount can be increased as well as decreased. Limitations of commercial banks, when we see students, funds are generally available for a short period of time. Banks make detailed investigation of the company's affair and financial structure before issue of loan. In some cases, banks may put restrictions and difficult terms and conditions. Difference between public deposit loan and from commercial banks, if we will see, what is the difference? Very first, public deposit, you can see, make a screenshot, you can get very easy information. No security required student when in the case of public deposits. Whereas loan for a commercial bank, yes, definitely when you want to take the loan from the banks, you have to keep some papers, very important precious things in the bank as mortgage. Governed by public deposit is governed by the provision of Companies Act, whereas loan from commercial banks are governed by the RBI. Rate of interest of public deposit comparatively low in public deposits, whereas loan from commercial bank rate of interest is very high. Rate of interest of loans from commercial bank is comparatively high. Period, public deposits are available for a period up to 3 years, whereas bank deposits are available for short and medium term. Suitable source of finance for companies with good reputation and financial standings, whereas loan for a commercial bank suitable for all enterprises. The secrecy point of view, there is no secrecy, whereas secrecy about bank loan can be maintained because there are the private. Loan from financial institution, that is a borrowed fund, another type of source of finance for the business. Beside banks, we can take the money from the financial institution which are helping the many small scale and large scale industries to do the business. It is generally borrowed fund and it is of long term. Public financial institutions are referred to as lending institution, development banks or financial institutions. Okay. After independence, the government of India realized that for economic development of a country, only commercial banks are not sufficient. So there must be some financial institution to provide financial assistance and guidance to the people, how to do the business, how to again get the money, everything. The need for public financial institution was felt due to the following reasons. Very first, merits of financial institutions are long-term finance. Financial institution provide long-term finance. Managerial advice. Financial institution provide not only give the financial things but also provide financial guidance so as to do the business. Medium and long-term finance, definitely there are categorized into two. Public financial institution can give the loan in two forms. One is medium and one is long-term finance. Subscribers of securities. Financial institution often subscribe to the shares and debentures of the other companies. Underwriters. Financial institutions underwrite the public issue of shares and debentures by companies. Means they also help to sell the company the shares. They become some of the time they act that their shares are of their own and they sell the shares of other companies. So they act as underwriters. Guarantee loan. Financial institutions provide loan guarantees to industrial units from other banks and financial institutions. In many of the term, it help the banks to stand for their business. Loan in foreign currency. Financial institutions provide loan in foreign currency to import machinery. This institution provide guarantee also for purchase of capital goods from foreign countries. So these was the features of financial institution. In the next class, we will move with the limitations of financial institutions. For this class, this much only. Thank you and have a nice day.